I will teach my Forex strategy to make lifetime money online. 90% win rate. The chart shows that the January 1940 area act as resistance and the RSI area near 60 an area of resistance. Look just how many times these areas act as either support or resistance, causing a reaction in price. Euro USD touches resistance area 8 times. Euro USD touches the resistance area for the 5th time and the RSI touches 60 area for the 5th time. Euro USD touches the resistance area for the 8th time and the RSI touches 60 area for the 8th time. The ability to remain below resistance established 60 as a strong resistance area. There are multiple touches of this area. When Euro USD breaks through this resistance area, January 1940, a buy signal is triggered. The minimum target for this trade is equal to the range of the pattern. That is the height from the resistance area of the pattern to the resistance line of the pattern. Applied below the resistance area from the breakup point. Though this is the minimum target, many times the reward will be many times this, which increases the risk to reward ratio. You place a buy pending order above the market price. That order is known as buy stop. For example, Euro USD's current price is January 1935. And you want to buy Euro USD if the price goes higher and reaches January 1941. Therefore, you have to set a buy stop order at January 1941. You have to set stop loss at January 1914. You have to set take profit at January 1965. We are now at 59/68 winning trades for Forex, which is right at a 90% win rate. How would you turn $1,000 into $10,000 in 9 months? With my trades I've been averaging 1:1 risk-reward ratio. Only place 3 trades per week. Risk per trade is 3% of capital. The chart shows that the 1.1800 level act as support and the MFI area near 40 an area of support. Look just how many times these levels act as either support or resistance, causing a reaction in price. Euro USD touches support level 5 times. Euro USD touches the support level for the 3rd time and the MFI touches 40 level for the 2nd time. The MFI break down support at 40 and moved lower while Euro USD is above support level. The ability to remain below support established 40 as a new resistance level. There are multiple touches of this level, the MFI touches this level but broken support at 40 acted as new resistance, and it is a first warning signal of a potential price reversal. When EUR/USD breaks through this support level, 1.1800, a sell signal is triggered. The minimum target for this trade is equal to the range of the pattern. That is the height from the support line of the pattern to the resistance line of the pattern, applied below the support line from the breakdown point. Though this is the minimum target, many times the reward will be many times this, which increases the risk to reward ratio. You place a sell pending order below the market price. That order is known as sell stop. For example, EUR/USD's current price is 1.1809. And you want to sell EUR/USD if the price goes lower and reaches 1.1798. Therefore, you have to set a sell stop order at 1.1798, you have to set stop loss at 1.1837, you have to set take profit at 1.1760. I'm now thinking about increasing my risk per trade from 3% to 5%, as it will be more beneficial to me based on my strategy. How would you turn $1,000 into $14,000 in 6 months? With my trades I've been averaging 1:1 risk-reward ratio. Only place 3 trades per week. Risk per trade is 5% of capital. Subscribe our YouTube channel for more videos about Forex trading strategies, free Forex signals, most successful Forex trading strategies. Contact us with website, YouTube, Facebook, Telegram.